Alright, welcome back guys. Today per fans request, let's look at Muyuan Foods, the largest company in China's hog industry. Again, we apply a few different metrics to evaluate it. First metric is company size. Muyuan's market capital is about 300 billion Chinese yuan, ranked number 1 in hog industry. Its annual revenue is 120 billion Chinese yuan. The size is pretty big. Next metric is financial condition. Muyuan's current ratio is 0.8, not meeting my greater than 2 requirement. Its working capital is a negative value, also not meeting the greater than long-term debt requirement. Its debt to asset ratio is 56%, much higher than our less than 40% requirement, and its financial expense is positive. So overall, financial condition doesn't look so great. Next, let's look at earnings stability. Muyuan has only been profitable for 1 consecutive year, far from our greater than 10 years requirement. However, its earnings growth in the past 10 years and 3 years are both quite outstanding. 10 years growth is over 400% and the 3 years growth is over 30%. Next, let's look at dividend history. Muyuan is not doing so great on this department as well. It has only paid out dividend for 1 consecutive year, and the past 5-year dividend yield is merely 1.2%, far from our greater than 4% requirement. Next, let's look at valuation. So Muyuan's past 3-year price to earning, market cap to 3-year average free cash flow, as well as price to book value. None of these meet my requirement, although its return on equity ROE is very decent compared to the industrial average. Its ROE to PB ratio is still far from meeting my greater than 8 requirement. So Muyuan's valuation seems quite overpriced. So far, you may think Muyuan is not a good investment. It failed my test in multiple metrics and seems pretty flawed. Actually, that's not what I think. On the contrary, I think Muyuan is a great company. After the swine fever virus in 2018 and 19, the pork price spiked and Muyuan's earning dramatically increased. And after that, Muyuan made a decisive move. It piled huge amount of capital into expanding its own production. And in the years followed, we can see its costs dropped year over year. Its overall efficiency has dramatically improved. The number 2 company in the industry, Wens, has chosen to outsource its production to individual farmers instead. And we can already see Muyuan's ability to control and improve costs is much better than Wens. I believe in the years to come, Muyuan will continue its costs advantage thanks to its scale. And this advantage will eventually be reflected in company's earnings. I think Muyuan's growth potential is huge. Analyzing this company makes me realize that my stock picking metrics based on value investing concept becomes limited and cannot derive a company's true value when I encounter a high growth company like Muyuan. I hope my understanding will improve in the future so that I can better balance value versus growth. So this is it for today. What do you think about the company Muyuan? Let's discuss in the comments. Stay tuned, guys.